I think we are very fortunate that we have the USDA Loan Program available in our area. You may have also heard this program referred to as the Rural Development Program. Now, with any program, there's some really good things and some things that we just need to make sure we're aware of. So let's start with some of those really great things. First and foremost, the USDA does not require any down payment. Yep, you heard it, zero down. So probably the best feature to that loan program. Another great feature is that the monthly mortgage insurance is so inexpensive. What that really means to you is that it really keeps your payment low, even though it's a zero down program. The third thing I really want to highlight is that you can have the seller pay up to 6% of your closing costs. So that means if you're zero down and you negotiate and ask the seller to pay your closing costs, you truly can move into a new home with zero down. That is an awesome loan program. Now, some things that you just need to be aware of, not necessarily negative, but we just want to make sure that it's still a good fit for you. First and foremost, there is a geographic limitation to the USDA loan. The purpose of the USDA loan is they want to help the outer areas, keep them revitalized, keep people moving to those areas. So any home in Springfield or any home in Battlefield will not qualify for a USDA loan. So you need to be purchasing in some of the outer areas in order to utilize the home loan. If you have a house that you've fallen in love with, don't hesitate to reach out. I can run the address through the USDA system and make sure that it's going to qualify. The other thing that you need to be aware of is that there is an income limitation with the USDA. And the key to that income limitation is that it is a household limitation. So it's not just the borrower that we have to analyze. We have to analyze anyone who's going to be living in the home, and the household income has to be below what the USDA requirement is. Now, the USDA requirement on that household income will be varied based on the size of your family. So again, reach out, let's talk through what those limitations would be based on your family size. Now, last but not least, I do want to make you aware that there is an upfront funding fee for the USDA loan. Now, it gets rolled in. It's part of your actual loan amount, so it's not anything that you have to bring, extra cash to the table. However, the reason I want to mention it is because if you are going to only be in the home short term, maybe 2 or 3 years, this may not be a good fit for you. And let me explain. If you came to me and said, hey, I'm up for a big job promotion and I'm planning to move to St. Louis over the next couple of years, I'm really concerned that you may not have enough equity in the home in order to clear when you went to sell. In other words, I don't want you in a loan program where you're going to have to owe money when you sell the home. The upfront funding fee gets added on to your loan amount. So if you're doing zero down, hypothetically, you're purchasing a $100,000 home, your loan amount will be $101,000. Again, I just want to make sure you're going to be in the home long enough to have a little bit of equity so that you're not caught when you go to sell. Now, if you're telling me, hey, I plan on being in the home 5 years, 7 years, 10 years, you'll be fine. But I just want to make sure that you're aware of that funding fee. All right, guys, overall, I love this program. We utilize it all the time. It's a great option for clients. Feel free to reach out. Let's see if it's a good fit for you.